season was over, or, oh, we're at the boring parts, think again. This week is actually a very important week for earnings. Several hundred companies are reporting, many of them retailers, some more restaurants, and other companies that were big winners during the pandemic. And now what's happening to them? It's time to tune in to what's happening with some of those big pandemic winners. A lot of them have sold off, but is this the time to buy? They've rallied in 2023. What is going on? So as you can see, there's plenty to look at. So I've picked out 5 critical earnings charts that you should be watching this week, although there are a bunch of other ones too, but these are the most critical ones. So what are they? Let's take a look. The first stock is one of Cathie Wood's favorites, TDOC, ticker TDOC. And as you can see, it's had quite the round trip here during the pandemic, but it has put together 5 beats in a row. That's no mean feat, especially in these market conditions. So what to expect on this next earnings? Nobody knows. So that's the interesting thing and why these are so critical. But shares over that 2-year stretch now are down about 90% off those highs. Year to date, however, we are getting a little boost. You can't really tell on this chart, though, because of the just huge sell-off. But year to date, up 27% on these shares. That's versus the S&P 500 up just 6.5 and the NASDAQ up 12.6. So definitely better than both of those. Now, what's it look like on the earnings side? There's no PE for TDOC because they're still in the negative. Expected to lose $61.29 in 2022. Could that be right? This is the first time I've questioned our data that's sitting there for a full year estimate, because next year, 2023, only expected to lose $1.39. But either way, it is going in the right direction for 2023, as far as we know, but they're about to report. So maybe 2023 isn't going to look at least a little bit better. That remains unseen, unknown. So TDOC, going to be an interesting one this week, and I'll be tuning in. Then we're going to switch over to the restaurant side. We've already heard from several chains, but Domino's was the big pandemic winner as we all stuck at home. They had the app. Everybody was ordering for delivery through Domino's. And you can see shares peaked there at the end of 2021, and it has been down since. Over a 2-year stretch, however, only down 3.8%. And you might be thinking, what? No, it's down bigger than that, but not really. Look over there at 2021, just on a 2-year stack, you get not that bad, but it's been a roller coaster if you've owned it during that time period. Year to date, these shares are up, but only minor, up 3.2%. So maybe all the bad news is priced in now. Those 4 misses in a row are a little concerning because they otherwise have had a pretty good earnings track record throughout the years. So what is going on that they can't match that? Is it the inflationary pressures? Is it labor issues? What's going on? But we're going to find out this quarter. Now, what are earnings looking like? Not too shabby. So 2022 expected to make $12. 2023, if this holds, expected to make $14.09. That's up 17.5%. PE is at 25, so it's not cheap, but that's come down. It was up above 30 in 2021, so it has seen a nice drop, but many value type of people like myself would probably want to get it a little bit cheaper than that. I used to own Domino's way back in the day, but I was not around holding on to it during the pandemic. Can it get some of its momentum back? We will see, but this is a big one this week. Then we're going to switch over to another pandemic kind of loser, but then became a winner, but now nobody knows. Planet Fitness, ticker PLNT. This stock has beaten 5 quarters in a row. That's pretty good given all that red that happened during the pandemic when they had their facilities shut and or nobody wanted to go to a gym. but now they do. So that's looking good. 2-year stack, these shares are down 1.2%. So basically almost flat here. Year to date, down 1.6. So nobody knows what to make about the gym here in 2023. PE, though, is still very high. PE of 37.6, so very high. But what about earnings? 2022, $1.59. 2023, continuing to see the rebound in the earnings off of those pandemic lows, up $2 to $2.06, up 29.7%. So we do have some good earnings growth there that could possibly justify that PE, but had the big sell-off in 2022, rallied off that. Are we going to retest those 2022 lows? We will see. Then we're going to switch over to Wayfair. I talked about this a lot on the Earnings All-Stars videos during the pandemic. It was one of the big winners because we weren't going to the stores, and we all need things like desks and desk lamps and all this stuff to work and go to school from home. But that's over. And people are kind of done getting new furniture, new things, new accessories, whatever they're looking for their home. So you can see the big dive. And we have seen 3 misses out of the last 4 quarters, although they did produce that beat. No, it was just a meet last quarter, but a meet is better than a miss. But still kind of struggling to get those estimates, or I should say the analysts are struggling to figure out what is going on. We've seen the shares pretty much round trip here and down 82% over the last 2 years. Year to date, however, you can see that little boost there in 2023, up big if you were market timing this and tried to buy at the end of the year, up 57% year to date. It had been up as much as 127% through January, but it has pulled back here in February, as you can see that little pullback there on the chart as well. So what's going on with Wayfair now on the earnings side? 2022 expected to lose $7.62. Yes, that is the consumer going away. Their costs rising. They had, transportation increases, fuel, all of that has risen. And so it's really hitting them. 2023 expected to lose another $3.23. That is earnings growth, though, of 57%, because it is going in the right direction. But the year that was the best for them, 2021, they made $2.32. So that was one of their more successful years, positive years in business. So I've never been a fan of Wayfair because they just can't seem to make money during normal market conditions. It takes something like a pandemic for them to see positive earnings, but we're not going to be in a pandemic for forever. So I'm not sure what their actual growth model is going forward to get back to earnings positive, but we may find out on this earnings call. So you're going to want to tune in to see what Wayfair is seeing with the consumer and its expenses here to start 2023. It has no PE because of the negative earnings. So ticker W for Wayfair. Then we're going to wrap it up with another big hot pandemic winner, Carvana, ticker CVNA. It looks kind of similar to the Wayfair chart with a lot of those big beats there during the pandemic. But look, prior to the pandemic, that was terrible. So the pandemic also gave it some new wind in its sails, but the wind has died. And we've seen the 5 big misses in a row now. What's happening with earnings with Carvana? 2022 expected to lose $9.98, but looking for improvement in 2023, down $7.70. So that's earnings gain of 22.8%, but still seeing the big losses. And we don't even know if this is going to hold. They haven't reported yet. So guidance could be worse than what the analysts are thinking it's going to be. And after we see those 5 big misses, it's clear the analysts maybe don't know what's really going to be happening here. Over the 2-year stack, these shares are down 96%. But if you had bought in thinking, hey, maybe we're going to rally to start 2023. Like some of the others, it's up big, up 139% here. You can barely see it on that chart though, to start 2023. And will that hold? Is that a fake out rally? Will these shares go even lower? They're basically at new 5-year lows here. So Carvana, a lot of people are going to be watching it. It is one of the story stocks of the pandemic and maybe of the post-pandemic recovery as well, one of the cautionary tales. So these are the critical earnings charts to watch this week, and Carvana is definitely up there. As I mentioned earlier, there are a lot of other important companies also reporting this week, including NVIDIA. But these 5, I felt, were some of the more critical ones to watch, just because of what happened to them during the pandemic, the success many of them had during the pandemic, and now the sell-off has happened. A rebound has mostly happened, except for maybe with Dominos, here in 2023. But what happens going forward? These are all questions none of us can answer yet. And that's why they're the most critical. So you want to be tuning into these. We're going to get more earnings again next week. I'll be back next week as well as the retailers continue to report. And a few other important names also thrown in at the end of the earnings season here, but it is going to start to wind down now. But this week, still very busy, so don't rule out some interesting earnings reports this week. I'll be bringing them to you outside of these earnings videos, always on Twitter and StockTwits. Be sure to tune in over there, just at my name, at Tracy Reinick. But as always, you can find all these videos on Zacks.com/YouTube. That's our YouTube channel. Get them over there. And I'll see you again next week with some more earnings charts.